Hello everyone, welcome back to my sessions on company final accounts. Dear students, today I am going to present an important topic, preparation of a statement of assets and liabilities and statement of profit and loss. For preparation of company final accounts, there are few prerequisites, and those prerequisites are: the student should know formats of company final accounts. He should know special provisions of the Companies Act 2013, and he should also know the notes to preparation of company final accounts. And regarding these prerequisites, I have discussed in my earlier sessions. Here one problem is given. They were provided the information through trial balance and adjustments. Based on this trial balance and adjustments, we have to prepare the statement of assets and liabilities and the statement of profit and loss. Dear students, before going to prepare the statement of assets and liabilities and the statement of profit and loss account, first of all, we have to make the bifurcation of the given items in the trial balance. In the trial balance, whatever the information given as a debit balance and credit balance, those are to be taken to the final accounts with a common rule, and that common rule is, if the item is given in the debit balances, that item may go to assets and it may go to expenses. Either it may be taken under assets or it may be taken under expenses. And in the same way, the items given in the credit balances are to be taken to the final accounts in incomes, or it may be taken to capital and liabilities. This is what the common rule, and we have to follow this. And as far as the information given in the trial balance is concerned, we have to effect each and every item given in the adjustment in twice. One in statement of assets and liabilities and another in statement of profit and loss. So based on that common rule, now let me segregate the items under respective heads. So first of all, they were given the item of building at the debit side. This building is an item of tangible fixed asset. And the next item, that is furniture, is an item of tangible fixed asset. Debtor is a trade receivable. Wages is an employment benefit cost. Bills receivable is that's a trade receivable. Returns is to be taken to revenue from operations. Then investment is a non-current investment. The interim dividend is taken under the head reserves and surplus. And we have to go for the audit fees. It is to be taken under the head other expenses. Director's fees is employment benefit cost. Printing and stationery is an item of other expenses. And purchases is to be taken under the note cost of materials consumed. Then machinery is taken under the note tangible fixed assets. Calls in arrears is a share capital item. Then cash is an item to be taken under cash and cash equivalent note. Then goodwill is an intangible fixed asset. The opening stock is to be taken under cost of materials consumed. And one more item in the debit balances, that is salary, is an item of employees benefit costs. I now come to the credit balances. Here the share capital is given. It's clearly share capital item. Then reserve fund is to be taken under the note reserve and surplus. Creditor is to be taken under trade payables. Sales is clearly a revenue from operations. Bills payables is to be taken under the note trade payables. Then returns. Here the credit balance of returns is there. It is to be taken under the purchases, that is under cost of materials consumed note. Then the important item surplus, that is a profit and loss credit balance, is adjusted under the note reserve and surpluses. Right. So based on these segregations, we have to prepare the notes. And one more thing, they were also given the adjustments, and just I have told the common rule for the adjustments. Each and every adjustment is to be taken twice in the final accounts. One in statement of assets and liabilities and another in statement of profit and loss. First of all, there is an adjustment number 1. Closing stock as on 31st March 2020 rupees 1,30,000. It is to be adjusted under the note cost of metals consumed once, and at other, that is in the statement of assets and liabilities, it is to be taken under the note inventories. Then regarding interest due on investments, rupees 10,000 is outstanding interest receivable. It is to be taken under other income, and in a statement of assets and liabilities, we have to take it in other current assets. Then make provision for income tax, rupees 20,000 is taken under tax expenses as well as in short-term provisions. And then transfer rupees 20,000 to reserve fund is effected twice in note number 2, that is the reserve and surplus. Then depreciate building by 5%, machinery and furniture by 10% each. These are to be effected twice, once in depreciation and amortization note, and at another time in tangible fixed assets note. The last adjustment, that is make provision for doubtful debts at 5% on debtor, is to be effected twice, once in other expenses and in statement of assets and liabilities, it is to be taken under the note trade receivables. So dear friends, based on these bifurcations of the items given in the trial balance and the adjustments, let me go for preparation of notes to that is the statement of assets and liabilities as well as statement of profit and loss. So first of all, we have to prepare the notes to accounts for statement of profit and loss. So dear students, first of all, we have to refer the information given in the trial balance as well as the information given in the adjustments. So first of all, as per the prescribed format of Companies Act 2013 for final accounts, we have revenue from operations. So for that revenue from operations, the information is given in the credit balances here. In credit balances, they were given the item as a sales, rupees 3,75,000, that is to be taken here. And from that, we have if there is any information in the trial balance, that is to be taken, but there is no further information related to this revenue from operations in the trial balance. But they were given one important item, that is debit balance of return. So it is a sales return. That sales return rupees 15,000 is given, that is to be subtracted from the sales, and the total is taken to the outer column, right? Then next we have to go for the next head of note, that is other income. As far as other income is concerned, there is no any information provided in the trial balance, but one information is given in adjustment, that is adjustment number 2, interest due on investment rupees 10,000. It is nothing but income, other income, that is to be taken here. And now we have to go for the third note, that is cost of materials consumed. For this, the information is given in the trial balance as well as in adjustment. We have to refer both here. Regarding this cost of metals consumed, we have to refer the information. There's opening stock is given in the debit balances of the trial balance, and that is to be taken. Then purchase is also given, that is to be taken. And at the credit, they were given the return, that sales return, purchase returns is given in the credit balances. So that return rupees 9,000 is to be taken, and then we have to go for the adjustment. So there they are given the adjustment number 1 for closing stock, rupees 1,30,000, that is to be subtracted from the given information, and the total of cost of metals consumed will get rupees 1,36,000. Then we have to move towards the next note, that is regarding employees benefit cost. And before that, I will make very clear regarding the 2 more items left here in the statement of profit and loss. That is, one is changes in inventories and purchase of stock in trade. Regarding those, no any information is provided in trial balance as well as in the adjustment, so just we will leave it. And now to go to the next note, that is employees benefit cost. So as far as this item is concerned, they are given 3 important items in the trial balance. One is wages, the second one is given director's fees, and one more item is given, that is salary. These 3 items are to be taken here, and only 3 items are there. There is no any additional information referring to this employees benefit cost. And now we can move towards the next item, that is depreciation and amortization. Regarding this, there is no any information in the trial balance, but we can refer the assets, amount of assets from the trial balance, but the main adjustment is given, information is given in the adjustment part. They were given the information about depreciation. Here the adjustment number 5, depreciate building, machinery, furniture, like that they were given. So 5%, 10% and 10%. On that basis, we have to calculate the amount of depreciation, and we will get the rupees 4,500, 4,500 and 9,500 of depreciation on building, furniture and machinery respectively. And then we can move towards the next item, that is other expenses. As far as other expenses are concerned, in the trial balance, they are provided the information about audit fees, printing and stationery, and they were also given the information about the provision for doubtful debts, not in the trial balance, but it is given in the adjustment. The last adjustment, make PDD at 5% on debtors is given, and that 5% is to be charged on the debtors of rupees 1,20,000. So 1,20,000 is given in the trial balance. On this, we have to adjust this 5% of PDD, and that is to be taken under other expenses. Then we can now move towards the tax expenses. About the tax expenses, the adjustment number 3 is given, that is make provision for income tax of 20,000, and that is to be effected here, right? Then now we can go to the next notes to accounts for statement of assets and liabilities. In this statement of assets and liabilities, first of all, we have to start with the share capital. About share capital, in the trial balance, they were given only rupees 3 lakh, and there is no any clarity about the authorized capital, issued capital, subscribed capital like that. But one important information is given in the debit balances also, that is regarding calls in arrears. So that calls in arrears is to be subtracted from the share capital, then the balance is taken as a share capital to the statement of assets and liabilities. And then we have to go to the next note, that is reserves and surplus. Here the opening balance of reserves fund is given, that is given after share capital is 1,80,000, and to that we have to add the transfer from profit. So during this year, in adjustment, they are given one information, that is a transfer rupees 20,000 to reserve fund. This is to be transferred here, and for this purpose we have to effect it again in the surplus. So here we have to add to the reserve fund, but again this reserve fund is to be deducted from the profit. So here the last year profit is given, taken from the trial balance of rupees 18,000, and to that we have to add a current year profit. Then we have to deduct the transfer to reserve fund rupees 20,000 as per the adjustment. Then interim dividend. So regarding this interim dividend, they are given the information in the trial balance, debit balances. So we have to take that item here, and now we can make the total of the reserve and surpluses. And likewise we have trade payables. As far as trade payables are concerned, in the trial balance they were given two important information. One is creditors and another is bills payable. These two items are to be taken. There is no any adjustment related to these. So for each and every trial balance item we have to refer adjustment. So if there is any adjustment related to that, we have to adjust in the note. Then we have to go for the next item, short term provisions. There is a short term provision for taxation given in the adjustment, that is to be taken here. Then tangible assets, we have just depreciated the assets in the statement of profit and loss notes, and as per that we have to subtract those depreciations from the respective assets. Then we will get the total tangible assets. The intangible assets, only one item is given in the trial balance, that is goodwill. That goodwill amount is to be taken. Then next is non-current investment. About non-current investment, they were given in the trial balance as investment, that is to be adjusted here. Then we can go for the most important item, that is the inventories. It is regarding this, the information is given in the adjustment, that is closing stock, that is to be taken. Then trade receivables, about this debtors and bills receivable items are given in the trial balance. We have to refer that, and for that we have to adjust the provision for doubtful debts given in the adjustment, the last adjustment. Then cash and cash equivalents, only one item is given, that is to be taken from the trial balance. Then as far as other current assets is concerned, outstanding interest on investment is given in adjustment number 2, and that is to be taken under this head. Then now we have to go for preparation of final accounts. First of all, I am taking the statement of profit and loss, and for that we have to follow the prescribed form given by the Companies Act 2013. So this, as per this, we have to insert just items, and likewise we have to prepare the statement of assets and liabilities as per the prescribed format, and we have to just insert the amount as we have found or got from the notes to accounts, right? So throughout this session we have solved a problem on final accounts with basic adjustment. These are my references, and thank you.